Traders, welcome back to our price action trading lesson. We're looking at S&P 500 and futures, and we're going to be using pure price action candlesticks as they are being printed on a chart to help us identify what is happening in the market and where are the right areas on the chart to enter. So right now we started with the bullish structure, so I have to redraw up to, you can see how nicely these candles fit inside this channel. We have a break, 2 legs to a new extreme, and market reverse all the way down. Now I can see that we have flat EMA, so for this reason, since we're going sideways, I'm trying to predict possible consolidation, especially if we trade it up into this. So you have new low, first entry short pullback, second entry short failure. I don't want to take failed second entry short just yet because uptrend just had to break a new high, downtrend doesn't have fully new extreme tested, and more importantly, this spike has a broad break push to new high, market is correcting, and the failed second entry short is below the high low, and that's a problem. So market is correcting. Right now this is pretty much waiting area. I want to see this trend range established. Okay, market is going higher. I don't think I can go long just yet because this support is just getting confirmed. I want a little bit more confirmed structure, but you can already see that market is entering right now in a new structure phase, which is consolidation, uptrend break new high. So market cycle right now is indicating correction phase. You have another failed second entry short, new low, first entry short, pullback, second entry short failure right here. Problem is we already have a small break new high. You know, this one is a little bit better because as you can see, it's higher than the high low. This is what you want to see. But there is a small break new high, a little bit unclear just yet, so I gotta be careful. But if you took it, not a horrible setup, I can see why. Market worked higher and market pushed all the way down here. So the resistance is getting confirmed, which is what we want to see, and the trend range is getting more established. So now I also have to follow short-term trend line rule inside of this trend range. So let's see what's going to happen. Normally, according to range rules, you want to buy low, sell high, but the downtrend is still in play. So I'm not buying. I want to see break a new extreme, and then I can consider buying. Okay, so for this reason, I'm not going long here. I can't take a high low as well. You can see EMA rejected here. This is a big spike down across the entire trend range, telling you, okay, there's a chance that the downtrend may get the new extreme tested. Okay, so if you're thinking about buying, you first want to see push above EMA because the downtrend doesn't have new extreme tested, and this is a big problem. So let's see what's gonna happen. Market keeps working higher like this, breaking new high, and market spiked all the way down here. So now what I can do is I can zoom out, and the structure is telling me that we traded up into this consolidation. Okay, so there is slight bullish bias. This downtrend, our initial leg, played out with the break new extreme. You can see market moves in pairs of twos. This is why it's such a powerful pattern. Most traders are unaware of this. But we have one leg down, break, second leg down. We also have one leg up, break, second leg up. So the measured move was reached. In fact, we pushed even a bit lower. And most breakouts out of trend ranges will fail. So this right here can be considered as a failed breakout. There was no trigger, and market is spiking sharply above EMA. This is perfect. This massive push above EMA is confirming the trend range rules. We're going to buy low, sell high, and most breakouts will fail. So this is how we are reading the price action, just using the candlestick. They're telling us everything. As you can see, these two legs are so broad. I'm not even going to draw a wider downtrend like this. That's incorrect. We don't draw super broad channels across the entire range, especially since it's resembling a two-legged pullback and you trade it up into this. So you have two-legged pullback down, breaking new extreme. So market right now is above EMA. So once again, I need to connect the lows. So I'm going to connect the first two swings here, copy it, put it at the top. And now we can expect bullish reversal back into trend range because we have massive spike back above the EMA, confirming that the buyers are back in the market. This right here is only first entry long, but counting from this low, it is basically a high-low confirmation of this whole breakout. So this is not a bad setup to consider. I was personally really hoping you get the second entry long, but the single bar is so tiny, only 1 point big. You can consider taking a high-low confirmation setup. And what it is confirming the failed breakout out of the trend range after the two-legged pullback played out. Can I get a second entry long? I have a new high here. First entry long, pullback, second entry long. There's going to be a break above this bar. Remember, once again, the signal bar doesn't have to break above the previous bar. The signal bar, this one itself, needs to get a break above its own high. But it's not related to EMA, so I don't like it. Now the trade still ended up working because we keep our stop loss one tick below the signal bar, and you can see the stop was never hit. It was close, but it was never hit. Now this is a little bit different trade because now we corrected. We have a new low because this is the lowest low of this correction. Okay, we corrected higher, actually we spiked higher, new high, and we're correcting working lower. So this is actually the lowest low of this pullback working lower. So you can view it as a first entry short pullback, second entry short failure, and you can see the trend line is in play. The key entry point, because the sellers, they sold here, they got trapped, instantly strong momentum reverse all the way back up. The key level is holding, EMA is holding, and the trend line is holding, massive strong momentum. So this right here is a failed second entry short. The option is in play, and we are heading back into the trend range. Failed second entry short. Can we get a second entry long? No. We have overshoot. Now we spiked all the way to the top of this trend range. Combined with the overshoot, we can expect some selling pressure, but I'm not going to think about selling simply because we traded up into this consolidation. So you can see how these price action rules, they all work together. Since we traded up into this consolidation, I'm more inclined to be thinking about buying and long opportunities rather than thinking about selling. It can really help you to focus more on the stronger side that is right now present in the market. So I always zoom out and I always pay attention to in which way we traded into the consolidation. Lo and behold, market is truly correcting because we have the overshoot and we have the stronger correction due to the resistance bounce. So once again, even though these short setups worked, I don't think we can take it because we expect new high for this uptrend. We have a new high first entry long, pullback second entry long, third entry long. So this is not double trap, this is only fourth entry long. We broke below. I really would like to see hollow first because we had the overshoot. You can view it as a visual to like a pullback, but because not only we had overshoot, but we bounced off the resistance, hopefully it makes sense why it's better to wait for hollow. Remember, if the key level is all the way up here and you didn't even touch it, you didn't even reach it, then there's a higher chance this bullish pressure is going to work higher. But because we already have a resistance right here and we bounce off of it, there's a chance that there's going to be stronger selling pressure as well. So in a situation like this, when I have overshoot, I have the resistance and we broke below EMA first, we broke below EMA here, it's always better to wait for the hollow, okay? So that's the better confirmation. When I have too many conflicting variables, I want to see the hollow confirmation setup, which never formed, break, and new extreme. So option played out. So now I'm pausing, looking to go long, but if I zoom out, once again, we trade up into this. So I'm not going to be thinking about selling, okay? Normally, selling the lower high in a healthy trend range would be okay, but we spiked into this, massive failed breakout, massive push up. So because there's bullish bias, I'm not thinking about selling just yet. So this is waiting area of development. I cannot go long, I cannot go short. So right now I need to see what price action will do, and I can see that I have brought 2 legs down. Okay, this is interesting. One leg break, second leg down, downtrend played out with the break, push to new extreme, and we spike back to the upside. And this is actually very similar to what we had on Monday, almost identical structure. Right now we pushed above our initial trend range and EMA is flattening, and it's starting to look like we have brand new consolidation, brand new mini trend range formed at the top of our main one. Because instead of after breaking new high, price is reversing back into the initial trend range to the left like this. It didn't happen. 2 legs are broad and the resistance is transforming into support. So now market is telling me, okay, we are entering a small consolidation phase. So let's see what's going to happen. Can I take high low first entry long? I cannot, okay? Because I have triple top, downtrend is in play, this is a small trend range, and we're coming off the highs of the small trend range. So in fact, I'm thinking about second entry long off to these lows, just like we had on Monday. Downtrend played out with the break push to new extreme. Same repeat pattern as we had here. One leg down, second leg down, one leg down, second leg down. So we have second entry long here, and we have another second entry long here. So you can see every micro price action rule is working. If you are going to combine everything, it's going to give you the big picture. But you have to go long above this bar, which is terrible, bearish. Then you have to consider double bar entry by the time you get a trigger. I mean, the range is so tight. I don't want to be buying this far up. I want to be buying right here near this support. So I have room, you know. Technically it works, simply goes too big. You want to see smaller, nice bullish bar at the very bottom when the range is this super tight. This is not even 10 points, so we gotta be careful. Market spike down, so I have to redraw a brand new downtrend. Once again, count reset. We're coming off the resistance. First entry long, breaking extreme, second entry long. You know, this one is even more of a failed breakout because we broke out of this mini trend range, but you know, the signal bar is quite sketchy. Once again, double bar entry, maybe more aggressive trader can consider. I would wait here. I was on my break here, but I would wait here. I want to see high-low confirmation setup. It's not a bad setup. I mean, your thinking process is correct. Downtrend played out, yes. It is a second entry long, fell breakout of this mini trend range. But sometimes, you know, since this is not a super strong trend range, you may go back all the way down to the initial one. So this full breakout is not as strong as a normal full breakout under normal circumstances, but you can make a case downtrend played out. No high-low, push up, can reset, so no nothing here. And market spiked all the way back down, so I need to redraw the downtrend working lower, something like this. Massive spike down, and now we have second entry short. Can you take it? You cannot. Okay, I can move the support lower now because trend range is expanding. Why this is wrong to take it? Because the uptrend is still in play. If I'm going to connect it, you can see the uptrend is still in play, or I even like using this swing right here. Feels a little bit steeper, more recent. You cannot draw trend like this. I'm going to delete this. This doesn't make sense. You can see this is just one bar spike up, and this secondary leg is 3 times, 4 times as big as the first one. This doesn't look right. In fact, you have 1, 2, 3, 4, 5, 6 bars right next to each other, bouncing off the key level. So you can see this is a sideways action, sideways action, sideways action, and this is where the spike when the uptrend started. So these shortened channels, they have to make sense, and you can even see how it visually looks like a one clean push working higher. So either way, how you draw it, like this or like this, the uptrend is in play. So I need to see lower high if I want to see new low tested. It never happened, and market continued pushing higher, and I was quite surprised there was no retest of the new low. As you can see, the bullish bias for the day is this strong, so now I have to expand and extend my uptrend like this. Break below, push above. I have to redraw the downtrend. What's going through your mind now? Well, this was significant bullish spike. Okay, so it's probably going to get new extreme tested. So I'm thinking about second entry long, EMA holding, something like this, a new high getting tested. This is what I'm thinking about. Can we get it? We have a second entry long, but it's so far from the EMA, I can't take it. Break and the new extreme, and market continues to go higher. Okay, so uptrend played out. And this is interesting. Okay, number one, what I'm going to do, I'm going to measure the one leg up, break, second leg up. So we can see that we have perfect broad 2 legs up, almost perfect measure move, almost at a tick. But because this push is getting quite significant, if I'm going to connect it like this, there's a case to be made for a nice wider uptrend. So when I find myself in a situation like this, when I have to make a decision between which structure I'm going to play, I need a little bit more price action, because we just perfectly reached break a new high and the measured move. Okay, yes, after breaking new high, you keep working higher, you keep working higher, you keep working higher, but it is still within the range of the second leg. So I don't want to get trapped. I need to see, if I'm considering, every single time when I'm considering wider channel, and I have 2 legs like this, I want to see stronger push phase. I like to see another push phase. I want to see prices going far beyond this measured move to truly negate the measured move and offer me one more push phase. So because I can see perfect 2 legs up, but also it's too bullish for me to think about reversal, I have to skip the second entry long. This is a second entry long, but I have to skip it because it is right after breaking new high, right after measured move. Also, massive spike into EMA and small inside bar. So in a situation like this, I want to see high-low confirmation setup to really clear the context and get rid of the conflicting variables. So right now we have double trap because we stopped all the early bulls and all the early sellers, but the signal bar is bad. The tail is gorgeous. You know, a few more ticks working higher and you can take it, but the signal bar is quite sketchy. But you can already see the trend line is getting more reaction, and this is what you like to see because this trend line was not confirmed, but now it's getting some action. So now, okay, the buyers are buying here. Can I get the high-low to be truly safe? And now we have a high-low confirmation setup. And this is what we're talking about. High-low confirmation setup. The risk is tiny, only 1.5 points. EMA held once, twice, 3 times. The trend line, you can see how it's holding really well. The prices are colliding off this trend line. So this is great. High probability setup, high-low confirmation setup. And it's confirming the fact that, okay, there is a wider trend line. We're going to go higher. EMA keeps holding. So this is the ultimate confirmation. And market keeps working higher and keeps working higher. So now the uptrend is still in play. So we're still thinking about buying, okay? Because the trend is still in play. I have to redraw the correction. And I can see that we have one leg break, a second leg down. Once again, broad two-legged pullback. The broader these two legs are, the better. It negates any wider downtrend like this. So broad two-legged pullback, we have new high, first entry long, pullback, second entry long, and it's not only second entry long alone. What other supportive pattern is there? Well, we have small consolidation. 6 bar stack right next to each other. So this is not only second entry long, this is also a failed breakout out of this congestion, failed breakout out of the congestion. Uptrend is new high according to trendline rule. You're at the key entry point. Decent bar. Would have been better had it not been inside bar. Had it take one tick lower. I skipped it. I was super tempted to take it. I was just taking too long to decide because I went to see high low. But when I hovered over this and I measured it 1.25, it is a tiny bar, especially with the limit order. You can have only 1 point risk. You know, I was supposed to take it. So because it is a second entry long combined with the failed breakout, that's the reason why, even though we didn't tick below, it ended up working, breaking new high, and now the market is about to close. So this is the overall structure for today. Spike into consolidation, and we ended up resuming into another bullish trend. So I hope you had a good trade. I'm going to wrap it up. I'm going to talk to you next time. Good luck with your trading.